All right, then, it's the second quarter and we're watching out for the consumer durable sector this time around. The first quarter was a lost summer for a lot of these companies because of the lockdown. So this time around, the hope is chasing normalcy. That's what the street is working with this time around. Trade activities are back to normalcy. Anywhere between 95 to 115% this time around in the second quarter. Appliances have led the recovery. It's business to consumer that has led the recovery. The B2B businesses, all the office demand is still under a tad bit of pressure, and that is likely to reflect. What is actually doing well in the consumer durable sector is that tier 2 and tier 3 cities, they are running faster than the metros. Metros have been more impacted by the lockdown. Over and above all of that, we've also seen a fair amount of demand come by, and footfalls have increased. Customer footfalls ahead of the festive season and pent-up demand leading higher footfalls as well. The trade is optimistic on offtake, and more importantly, because there is pent-up demand, lack of supply and optimistic demand from trade ahead of the festive season, there are lower discounts. So all of this would mean that the operational performance for all these companies would be much better than the top line. There would be a sequential recovery, but nevertheless, there would be a fair amount of decline for the company's top line if you compare it year on year. So a 12 to 15% decline for Voltas, 20 to 25% decline for Blue Star is what we're expecting this time around. And this is primarily on account of the weakness in their enterprise or B2B business. Consumer business is likely to be mild positive this time around. Havells, the street is working with a range of anywhere between 11 to 13% on growth front. CG Consumer as well, more consumer focus out there as well. A double-digit growth is expected. For Bajaj Electricals, this 20 to 25% decline would be led largely by their EPC vertical, from where the company has removed its focus. The consumer business out here as well likely to grow around 5 to 10%. The other verticals we're talking about, Amber. Amber makes air conditioners and they had a lost summer. So this time around too, the revenue is expected to decline by about 25 to 30%. While for other companies like Whirlpool and Dixon, there is growth anywhere between 5 to 10%. So that exactly is the expectation for the consumer durable sector in the second quarter. The hope is of chasing normalcy.
Okay, thank you very much for all those details, Mangalam. Let's see what the experts and the analysts are expecting. Joining us now is Naveen Trivedi from Institutional Research Division of HDFC Securities. Thank you very much, Naveen. What are you expecting in terms of, company-wise performance? Where do you think the growth will be best? Will it be Havells and CG as Mangalam was indicating?
Yeah, yeah, hi Lata. So firstly, what about Mangalam talked about the recovery part. I think we agree with that part. If you look at the situation between July, August, and September, what we also noticed is the sequential recovery during the quarter. The B2C part, where the growth was pretty encouraging. If you look at across segments, there has been improvement. The tier 2, tier 3 cities was already doing good. The latter half of the quarter, what we also noticed, the metros also have started doing well. So that way, the companies where the share of B2C is higher, they will be able to do well. It all depends on the mix part, like the Voltas part, where the EMPS business is also a big dragger to the overall performance. We as an analyst always look the businesses as a separate, and we always compare businesses on a like-to-like basis. So if I'm comparing Havells, I will compare the B2C part with the other B2C businesses.
Okay.
So I think Havells and Crompton, I think will be able to deliver a mid-single-digit kind of a growth. Despite the B2B, there is a sequential improvement, what we have noticed.
All right. Naveen, good morning. What are your top picks in this sector from a long-term investor standpoint, and what would the target prices be?
Yeah. So our take here is that the bigger players will continue to gain market share. And that way, although if you look at the stocks which we were pushing, the Havells, Crompton, Voltas and TTK Prestige, although the Havells and Voltas has run up a lot, and to some extent, from the near-term point of view, I think these two stocks captures the absolute return point of view, in our opinion. Although the medium to long-term prospects are very strong, So there we don't see that the long-term opportunities are very huge. But from the point of view of near to medium term, I think these two stocks has run up a lot and captures most upside. If you look at the Crompton TTK Prestige, I think there is still, we believe that the upsides are there. So we are positive on these four counters.
Which all?
On the absolute upside. So we are positive on Havells. We have ad rating on Havells, Voltas, TTK Prestige and Crompton.
All right. Okay, Naveen, we will leave it at that and look forward to your comments once the numbers are announced.